Today, we're diving into an extremely important aspect of Bitcoin, the Bitcoin halving. Let's break down what it means and how it happens. Bitcoin mining. First, a quick refresher on Bitcoin mining. Miners use a vast network of computers to secure the Bitcoin network and validate transactions. In return, they earn Bitcoin rewards. It's the backbone of Bitcoin's decentralized security. How the Bitcoin halving works. Every 210,000 blocks, or roughly every 4 years, the Bitcoin halving happens. This event slashes the block reward miners receive by half. Let's look at how this has played out since Bitcoin's inception. At inception in 2009, miners received 50 Bitcoin per block. With blocks being mined approximately every 10 minutes, this amounted to around 7,200 Bitcoin created per day. The first halving in 2012 reduced the block reward from 50 to 25 Bitcoin. Consequently, the daily production of new Bitcoin fell from 7,200 to about 3,600. Fast forward to the fourth halving in 2024, the block reward was reduced from 6.25 to 3.125 Bitcoin per block. This reduced the daily production of new Bitcoin from 900 to around 450. As you can see, the reward exponentially decays over time. By 2140, it will have reduced to such a small number that the reward will round to zero. This is how the supply of Bitcoin is limited to 21 million. Halving versus stock split. It's important to clarify that the Bitcoin halving is not like a stock split. In a 2-to-1 stock split, if you own one share of a company, after the split you would own 2 shares. However, each share would now be worth half as much, meaning the total value of your holdings remains the same. This adjustment is designed to make the stock more accessible or appealing to investors without changing the underlying value of the company. The Bitcoin halving, on the other hand, functions quite differently. It does not affect the existing supply of Bitcoin at all. It merely reduces the rate at which new Bitcoin is created and entered into circulation. If you hold 1 Bitcoin at the moment of the halving, you will still hold exactly 1 Bitcoin after the halving. The significant difference is that the rate of new supply is cut in half, which can influence the overall scarcity and potentially the value of Bitcoin, unlike a stock split which aims to retain the same market capitalization. Gold mining versus Bitcoin mining. A contrast in supply dynamics. Gold has long been treasured as a store of value throughout human history, its supply governed by the rate of mining and the discovery of new deposits. The total amount of gold that can be mined is unknown, potentially expanding as new mining technologies emerge. In stark contrast, Bitcoin introduces a fixed, predictable scarcity. The total supply of Bitcoin is capped at 21 million, with the rate of new Bitcoin entering circulation halved approximately every 4 years, known as the Bitcoin halving. Unlike gold, where advancements could unexpectedly increase supply, Bitcoin's supply curve is predetermined and immutable, ensuring its scarcity in a transparent and unalterable manner. Understanding the mechanics of the Bitcoin halving is essential for anyone involved in Bitcoin, from traders to miners to everyday users. It's a key factor that helps maintain Bitcoin's decentralized nature and economic strategy. Thank you for watching our breakdown of the Bitcoin halving. If you found this helpful, please subscribe and turn on notifications to stay updated. We'd love to hear your thoughts, so feel free to leave your feedback in the comments below.